Afternoon, how are we all doing? I'm a bit late again. Always a bit late. I'm allowed. Afternoon, Peter, Baggy, John, Francisco, Fletch, Virginia, Crom, JC, Brian, Amy, Marco, AZ. How are you doing, Jerry? Right. Movement is underway by the looks of things, which is good news. We've got lots of stuff on the move. Starting to move, anyway. Afternoon, EMAC. So news-wise, this morning, we are waiting for the GDP figure to come out for, sorry, not the GDP, the CPI figure, preliminaries to come out for Germany. What we got was an as expected. So the Spanish and the German both as expected, 0.3 and 3.5. So no difference. It's not bearish. That's a good thing, which gives the euro and the Swissy a little bit of breathing room. If you look at the reaction so far, Euro US. So we've had a push up on the euro, a little bit of a pullback. All the European pairs making a little bit of headway off the back of it. Euro Swiss sideways, meaning that the Swiss franc has also had a little bit of strength, but it wasn't massive, the Swissy. We didn't get too much movement on that. First entry just going in on the pound Swiss short on the H1M5 mean reversion. So there's your H1 RSI extension. Market reversal alerts EA taken the first trade on that one on the reversal alert, which was there. So there's your reversal alert. That's the entry on the bottom of that candle. So first entry gone in on that. US dollar Swiss came down. We've had a little bit of a pushback on it, but is starting to move as well. Didn't get the reversal alert on that, as you can see. So, but all starting to move anyway, which is always good. Afternoon, David. So that's the only news we've had today. Apart from the retail sales for the Aussie this morning, the GDP, excuse me, for the US came out as a negative, which is good. So bearish news at last. We had ever such slightly bullish unemployment figures, though, which kind of cancelled that move out. Although the GDP is lower than expected, so basically there's been no growth. With basically what that means, unemployment is coming down though. So, but we'll wait and see what the actual unemployment rate is, which is much more important. The only other news we've got this afternoon is the pending home sales, which doesn't really tend to do a lot. And then we've got Powell speaking at 9 o'clock this evening. Just going to see if he's going to get interrogated. It's a town hall event with educators. Unlikely he will get quizzed too much, I don't think there, but we'll see. So yeah, there might be movement late night on and overnight in the Asian session if he says anything. Japanese CPI tomorrow morning. That's marked as an orange, but right now that Japanese yen could go any second. So yeah, we'll see what happens there. But that's the news this afternoon. Not a lot to look forward to. DAX this morning, really simple break today. So the pre-market break was a very simple straight in, straight out target, mucked about a bit at the open. So if you took the 5-minute today, you had a little bit of a whipsaw and then a short. So it's probably a break even because you would have been stopped out short, stopped out long, flipped short, and got your 2R on that. So it would have been a break even-ish. But the pre-market range, as usual, well, when it works, nice and easy. What I called out this morning, I said, watch this level for a bounce today because we've got a gap fill to the upside to complete for the DAX. So we push straight down into the yesterday's low, double bottomed beautifully. That's the gap fill we're going for, which you can't quite see. There. So that Wednesday gap hasn't been filled yet. That's well above ADR today, so it's going to take a pretty big drop on the DAX. Pretty good push on the DAX to get up there. But we'll look at the US indices. US market's not really moved much at all. So the Globex session, as you can see, is that we've not really done anything Globex. So total sideways move, pre-market highs and lows, very tight. So nothing much there. There's a few ADRs to look at. Oil again has hit ADR, but this time to the downside. So a big pullback on oil, which is kind of what the CAD needed. Big kick in the arse. So that's a lovely move. I was fully expecting this to rally to that 95 today because it was well within touch. It was 125 ADR is all we needed to get that 95 target. Markets decided no today. So watching this level here, 150 ADR, we probably will get a bounce down there. But it would be lovely if oil can pull back. That would really sort the CAD and the US out if we can get this oil price down and doing this pullback, which we were looking for, before it rallies up to that 95. That'd be fantastic. We'll see. Overnight news, morning news, not a lot. The US GDP figure obviously was slightly down. Jobless claims was slightly up. We had a little bit more. So for those of you that weren't in the session this morning, we had overnight the Japanese again telling us that if you don't stop devaluing the yen, we're going to get cross and do an intervention. So we're closely watching FX moves with a sense of urgency, again reinforcing that do not push the yen message. That was the overnight news. Other than that, we've had some Hauser talk, but nothing particularly exciting. Oil briefly touched $95. Markets just opened. Did it? $93.97 I've got. So no. Mine didn't, put it that way. Sorry, let me just check what's going on here. Pre-market ranges skipped on the Dow. They're all too small. S&P hasn't triggered orders for some reason. And NASDAQ, I'm in. Where's the S&P orders then? What have I done now? Don't know why that hasn't triggered. Would be short on the S&P. Am short on the NASDAQ. I know why that didn't trigger the orders. It's put the lines in, and the next step is to place the orders. But there's nothing in the logs. Weird. Anyway. Don't know. Afternoon, Kenley. Yaraki, I think. Peter. Oil on IC markets reached 95. Did it? That's probably different oil. I'm monitoring West Texan. So crude may well have hit. I don't think I've got crude. Oh yeah, I have. Yeah. So Brent hit basically. $95 a barrel. WTI didn't though. But yeah, Oh, so maybe that Brent was the target that Goldman was talking about. That's where they've sold it. So yeah, they'll all come down. They all move the same basically. All the oils. I say all the oils. The oils. But afternoon day trader, Broco. What's your TP on pound Swiss? I don't know. Pound Swiss is a bit of a nightmare. It's a bit of a sideways mess. So as it's the pound Swiss, I'm expecting the pound to power up a little bit. I'm probably just going to go with a small one on this because it's a single entry. So I'll probably just go with 0.25%. So looking for roughly just under an ADR, 3/4 of an ADR. Watch this level here, basically. So we've got this high here. It's got this sort of area which was resistive last time. Mainly that area there. So I'll target just above that, which is about 3/4 of an ADR. US oil on the city index hit 95. Yeah, so it's basically it's not West Texas, it's Brent. Hit 95. I see a Thursday reversal forming on the S&P. Not going anywhere yet, is it? Totally sideways. Looks like I'm about to get hedged on the NASDAQ. The Dow Jones range was too wide today to take. So I'm not trading the Dow today. Far too small, that range. That range is too big. That's put in 920. That's more than 20% of its daily range. So too big to trade for me personally. But if you are taking the pre-market today, that was really tight. You whipsawed. If you're taking the 5, you are long. S&P pre-market is again a whipsaw. 5 hasn't triggered yet. Bit of a whippy open. I can't see that we're waiting around for home sales. So I think we'll just get a move going in a minute. It's just waiting. Aussie dollar yen, ADR. So we'll go for the ADRs. So oil, obviously, first one. ADR hit to the downside. That was the weekly range. We looked at that one this morning. So it did its basically weekly range in 2 days. We had 2 massive ADR moves to the upside. So we're pulling back on that now. Multiple supports, that being the main area. We're straight through that one. So we're looking at least 150 ADR before we're going to find any signs of buyers, which is a 50% retracement on that move if it's going to continue up. But as we've just said, if the forecast was 95 on Brent, we've hit that. So there we go. So yeah, big move down basically underway on oil, which is lovely for the Canadian dollar. Aussie dollar CAD. So that's obviously got an upside hit. Everything that's Canadian dollar based will obviously be rallying. So target on this, again, I'm long on it. I haven't got a target set, but couple of propulsion gaps. I mean, that's half an ADR, 0.5%. Maybe a look at that, see if we can get 200 ADR. Aussie dollar yen. So again, you know, these moves that we're seeing here, hitting ADRs to the upside, there is a good chance that they may start to reverse from here. Obviously, if you took the ADR, if you took the reversal just at ADR, you will have had a reversal alert in there off of ADR today. That was your reversal alert candle there, so you would have gone short. That's ADR. Pushing up above it so far. So yeah, I mean, it might reverse and pull back from there, but we've been waiting for some Canadian dollar weakness for such a long time, and US dollar weakness. If this is the start of the move, this thing could have multiple day rallies now. So I'd be wary about reverting it, but there's plenty of targets to the upside for pullbacks. If it rallies up all the way up to there, you're looking for a pullback on it. So you have to scale in if you go short on that one. Aussie dollar yen. Yeah, nice ADR hit to the upside. More than happy to short that. Not extended on RSI, but yeah, any shorts on anything against the yen, absolutely fine. So that's an ADR hit to the upside. Take the reversal alert short, wait for that intervention. And if the intervention doesn't come, the market will weaken anyway. So, or rather, it will buy the yen and strengthen up the yen, which means everything will weaken against the yen. So either way, whether it's an intervention or a normal move, yen's coming down at some point soon. Aussie US hit to the upside. Again, 5-minute reversal alert is there. You've already had an alert on that big spike up. That's the alert candle. So that low there would have given you a reversal alert. And obviously what they've done is they've just touched that high and pipped above it. So it's invalidated that reversal alert. So the next one is pretty much the same level. So that is potentially an M pattern formation going in there. Good looking short opportunity. I'm long on this at the moment. So yeah, I mean, obviously as stuff goes, doesn't tend to go like that, does it? We move up, down, down. So no problem taking ADR reversals, but just bear in mind, we are expecting US dollar weakness. So you want to be careful. Don't get too greedy. Shorting anything against the US dollar. Pound CAD. So we've got a lovely start to the move on this one today. So we've done ADR. It's already played out by the looks of things. If you took the reversal, I know. Yeah, you had an entry there. That was the ADR there. Yeah, that was the initial reversal alert there. We just tapped the high again, tapped the high again. Now we've just put in a new low. So this bit is an outside bar. If you look at it on the hourly, you'll find an outside bar set up. So there's the low of that candle, high of that candle. That's an outside bar. So take a break of that outside bar, whichever way it's going to go. Hopefully up. Pound CAD, pound yen. But obviously that can come back down. So we got that on that pound CAD. We've got these lovely propulsion gaps, especially this one here, to come and retest to find some more bias to drive this rally up. So it could all come all the way back down to here and then drive from there. Pound yen. Again, same thing. I wouldn't want to be longing this one. Doesn't matter how strong that pound is. If that intervention comes, everything is getting run over. Doesn't matter. So, yeah, good looking short opportunity there. You've just had the reversal alert on that on M5. There's your M pattern reversal. So looking for a retest and drop, which is just done, the retest. New Zealand dollar CAD. Again, you've had the reversal alert on that one and the retest. So there's your M pattern. It's a bit of a weird M pattern. That's the news. So yeah, but that is coming down as well. Obviously, just be careful with these at the minute. We've been waiting for such a long time for US dollar to take its foot off the gas. When it does, everybody starts to think, oh, jump it. You know, this thing and this Canadian dollar now and this US dollar now drop off of this weakness we've just seen in the news, and the fact that oil is starting to potentially start a fairly big pullback from the target that was set. We could find a multi-day run that way. So just be careful mean reverting against this US dollar. New Zealand dollar CAD and New Zealand dollar US dollar. And the CAD New Zealand, CAD and the US, pretty much the same. Look at those two. The price action's not dissimilar on them. So the 5-minute reversal already on this one, that kicked in up at the highs. Lovely tight reversal. That's a TP. So if you got into that one, you're out already. We got 23 pips off of that, half an ADR. So it's moved down half an ADR already. So those are your ADRs. Weeklies we went through this morning, but weeklies obviously are all starting to mean revert now. Choppy old open on the indices. This terminal's slow. So a lot of downside pressure being held by the buyers at the moment. A lot of buying off of this level. Look. So if they do manage to break that low, we're going to flush today. I'm only in the NASDAQ, so Dow's just broke to the downside on the 5-minute opening range. Also, though, unfortunately, you probably got triggered on a long. So you're either hedged or you're stopped out and flipped short. So the Dow, let's have a look at where we're going potentially today on these before we look at the RSIs, which there's not many of because all the RSIs that we've looked at for the last 3 days, which are extended to hell, are all flipping back the other way today, aren't they? So the Dow today, there's yesterday's low, obviously, which is ADR. So if we're going to flush, looking for a bounce out of yesterday's low, we'll find limit orders triggering down there. Whether or not we get the bounce or whether we flush through it, we'll find out when we get there. So that's your downside target. We've got to break and hold this pre-market low, though. So we'll see where we get to from here. If this pre-market low holds up, obviously we've got an opportunity to go into rotation and just stay in a range for the day, which we do occasionally do. If not, we're looking at yesterday's high, which is well within ADR, so you'll find some kind of reaction out of yesterday's high. The S&P, you've got the highs there to look at. That's let's just 15, so it's a bit clearer. These are all those support levels that we were looking at previously, that we were saying, these are old levels going back, which were from higher time frame, 4 hour, I think, wasn't it, we were looking at. So it's that accumulation, which was these 2 lines here, and then that high there, which is where we started that propulsion move, which we haven't come back and tested. So this is the first retest of that propulsion move that we started that rally. So those levels there are exactly what we've tapped into. So we tapped into the first one on Tuesday, Wednesday, Thursday, no, Monday, stopped prior to the second one, and then we tapped straight into that low yesterday, bounced out of it. So these limit orders triggered off of that level. They bought it all up again. So potentially this is the start of a W pattern. We're looking for that reversal alert on the hourly to start a leg up back into propulsion up here and retest this area. So S&P downside, if we do break down, you're looking at a double bottom, which is also ADR. If we do break up yesterday's high, and then you've got this accumulation here for sort of 2 days, so it's going to be quite tough to get through that, and ADR is pretty much there anyway, so wouldn't want to go much higher than that today. There's no news catalysts to really drive it anyway, and the NASDAQ is pretty much the same as the S&P. We're looking at tapping into yesterday's low. This is the previous day's low, which is holding up at the moment. So upside, we're looking at ADR really back into propulsion, but ultimately looking to find some support. Now this US dollar is starting to weaken, potentially the indices will start to rally again. Yeah. So as the US dollar powers up, the indexes drop. As the US dollar drops, the indexes power up. So what we're looking for, if this is going to be weakness in the US dollar, is a W pattern reversal, breaking highs and then moving market structure back up on the indices. So you'd be looking for upside targets for where we might find some selling pressure coming through. So we're not really going anywhere at the moment, though. NASDAQ can't hold. So NASDAQ can't get that break. Yeah. So the propulsion move that we had there. Yeah. So that massive propulsion gap, which got retested. It's been tested, testing. Buyers are buying this level very, very, very heavily at the minute. So if we do go long here, and we can get through that drop, pre-market highs obviously, and then yesterday's high, which is there. So we've got a couple of levels which are pretty close, haven't we? We've got this level here, we've got the pre-market high, and then we've got yesterday's high. So if we do break high, we're going to run into selling pressure here. Best scenario would be to break down to yesterday's low and then get some momentum from buyers down there, but we'll see. Everything else is selling off. Dow's selling off, S&P's selling off, so there's no reason why the NAS shouldn't break that low. If we break that low, we're going to get a pop. So just watch this low here. We got pretty much to the pip a quadruple bottom. So there is a lot of liquidity sitting under there ready to flip short if they can't hold that level. This could well be an iceberg sitting here and the market just sitting in this propulsion gap going, yep, we're long. Told you we're long. We are not going short. They just won't get through it. If that's the case, everybody that's trying to get through here will puke the other side and go long. It's a battleground. We'll wait and see. Afternoon, Gordy. Jimmy, hi all. If trading ADR strategy manually, what would be a good reversal signal on the 5-minute? Reversal alert, of course. How did you ask that question? How could you possibly ask that question? So if you're trading ADR reversals, M5, wait for a reversal alert. Yeah. Not a great one there, but you know, you're waiting for the market to basically show you that the sellers are on board. So what a lot of people make the mistake of with ADR is assuming that just because we've hit ADR, we're going to reverse. Yeah. Manually, you don't have the alert. Get it. Get it. Or look at it yourself. Draw it yourself, yeah? So when you get a down candle and you make a new high, draw a line. If it breaks that line, jump in. That's all the reverse alert does. The reverse alert indicator just shows you when the sellers have taken control. So basically, when there's a sell move and we push away from it and we are unable to continue the move by making a new high, when we break the level that we last tried to sell at, it tells you that the guys that tried to sell there have taken control of the market, which is what a reversal alert is. Then you're looking for them to continue that move, the buyers to push back, and them to add into that position, which is what a retest is, M pattern. Yeah. Sellers will try and have a go. They can't make it. They'll have another go. They'll break it, and they'll make sure that they're in control. That's what an M pattern reversal is. That's what the reversal alert indicator is showing you. The structure and who is in control of the market. Yeah. So when you get to ADR, you wait for the sellers to take control. If it's an ADR high or if it's an ADR low, you wait for the buyers to take control. You just get in because it's hit ADR. There's nothing to say it won't hit 125, 150, 175. What are you going to do then? Just keep getting in every time it hits a level? Because this thing can go 200 ADR. We've seen it many times. So you wait for whoever you want to be on your side to be on your side. Let them show their hand. Let the market show its hand first. There's two ways. There's differing thoughts on how to get in to the market. There is no right or wrong way. There's different, and each one has got different risks associated with it. So, for example, this ADR that we're looking at here with the New Zealand dollar CAD, what you could have done is as soon as it hits ADR, hit the sell button. Yeah. If we are going to run out of steam at ADR or 125 or whichever level you've picked, you are getting a super, super tight entry. You're getting in at the top, which is brilliant. But what's the risk? That doesn't happen. And it just screams through this level up to 150, 175. So what you've done is you've just hit the sell button for the sake of it, because it's hit a line on your chart, which may or may not mean anything. The odds of it going through this level are 50-50. It's either going to go through it or it's not. So if you wait for some kind of bearish signal, in this case, a bearish engulfing, that is your first confirmation that there is potential for the sellers to take control of the market here. However, they've got to get through all these buyers first before it's confirmed that there is enough selling pressure or lack of buying pressure to actually make a move from this level occur. This is what the reversal alert shows you. The fact that the buyers basically have been run over, or in vice versa. And then when the sellers, or the buyers in this case, let's look at that other one. What's the other ADR today? There's a cleaner one that's easier. So we hit ADR, yeah, screamed into ADR. The sellers took control of the market, yeah. We had a little battle for a bit. We pushed down. So the sellers basically tried to move down. The buyers tried to push them back. This is where that sell order started, where the propulsion gap formed. As soon as we hit that, the sellers went, nope, we're short. We hit the short button here. We're going to hit the short button again and make a new lower low. Yeah, market structure. High, low, lower high, lower low, lower high. Where are we going now? Lower low. As long as the sellers are in control, we will put a lower low in. If the buyers are taking control, we will put in a new high there. But then the sellers could add again and we could move into a range. Yeah, that's what market structure is. All this indicator tells you is that the guys you want are on board. And you can use ADR, you can use an RSI extension, you could use a support and resistance level, you can use anything. But this indicator confirms who's got control of the market. So if you're a seller, you want to wait. If you want to be cautious, yeah. If you want to get in, you know, if you've got a resistance level or a supply and demand indicator or whatever there, you can hit the button as soon as it gets there. But if it just rallies straight through that level, all you're doing is you're getting in short and immediately getting run over. At least with this way, yes, you're getting a worse entry than if you'd have entered here, but you're getting confirmation that there's a higher probability of your trade playing out because the guys that are selling. Here, there's no confirmation that there's any sellers on board. So you're just basically flipping on a coin and going, I hope the sellers come on. If the sellers don't come on, you're stuffed, you run over. And you're either going to get stopped out or you're going to get into another position, in which case you've taken that position unnecessarily. The whole point of the indicator is to show you the strength in the market. Swiss yen's just hit ADR to the upside. Good, strong Swiss franc movement. So yeah, good ADR reversal opportunity here. Again, probably not the best one to take, the Swiss yen, because we are anticipating some Swiss franc strength. However, if that yen kicks in and they do the intervention, it really doesn't matter what you are. You could be trading the strongest thing in the world that's never had a stronger push than it's having right now. If that intervention comes, it is getting run over. Everything is getting run over. So although if you've got something strong when the intervention comes on the yen, this will get run over less. See what I mean? So if you've got a weak currency and then the yen powers up, that weak currency's got nothing. It's just going to go twice as far as everything else. If you've got a strong currency, when the intervention comes, there's going to be a lot of pushback. Therefore, it's not going to move as far down. So this is the weakest short to take because we are expecting Swiss franc. It's another good example of propulsion move, yeah? Reversal alert. Yeah, so we sat down here. The sellers pushed down. Yeah, the buyers tried to make a move. The sellers pushed them back and made a new low. Yeah. Then the buyers took control of the market. We got the reversal alert. We put the propulsion move in to show that there's buyers in control. The sellers tried to take control back. The buyers added into the position at the same place that they took control. Propulsion move. Big order. No, we're long. M pattern, W pattern, market structure. It's all the same stuff. We're just looking for clues as to where the orders are in the banks, and that's what the propulsion gaps do. Right. RSIs we'll have a look at. Hedged on the NASDAQ. These markets are just a pain in the arse. Literally at the moment. All the opens are just choppy as hell. There's nothing running. There's nothing running. There's no indication of any direction at the open. Nice open on the DAX today. It was messy, but I got it. which was lovely. So 1200 banked, 900 hedged. Would be hedged on pretty much all three of these. Choppy mess today, isn't it? So I'm going to leave that to play out for a bit. I'm still not convinced we're not going short. If you look at the Dow, structure's still short on the Dow. Looking for this propulsion gap to hold up and keep market structure short. If that's the case, we may well get a continuation on this, but obviously these two guys have just broken highs. So we'd be looking for a pullback and drop on this. So there's a propulsion gap forming here from that high and that low. So 45 seconds, that's going to draw a propulsion gap in there. So this is a propulsion move. The buyers have kept control of the market and shown that the sellers are not strong enough to push back. Therefore, we put in a little barrier there so that every time we come back into this zone, there's a high probability we'll buy out of it. In the same way as the sellers' propulsion move there, they sold and left this whole area here where we haven't retested with buyers. Now we have. Yeah, so propulsion gaps filled. We've run them over. So now we're putting in a propulsion move to the upside. So the buyers are back in control of the market. 10 seconds, and those propulsion moves will go in. There we go. So there's your propulsion gaps. So that's what I'll be looking for if the buyers are going to remain control of the market. Obviously, that's the if. Propulsion gap just about to get filled there. Right, so long. We're going long on the NASDAQ at the moment. So be watching the pre-market high and yesterday's high, which is this level here. So that's the low of a week ago as well. So this low here is exactly what we tapped into there. So it's this kind of area here where we've struggled to get through it, and then we slammed through it, put a propulsion move in, retested it, retested it, retested it, retested it. This is a strong sell zone, so you want to be watching this area in case they hold it down from there. So long, if you're in a hedge like I am, when we get to this area, although it's been kind of filled in, we did sell hard out of it. So I'll be watching this area because we couldn't get through it again this morning. For good strong price action, so you can exit those long positions in here when we get some selling pressure coming in, and then assuming that we get a pullback, we can exit the shorts here and bank that profit. Sec. Right, Aussie dollar CAD 125 ADR. So still pushing up. So there's your reverse alert gone in now. Nice V-shaped recovery on yesterday's sell-off. So remember what I said yesterday about these moves, these final moves that we quite often see when we're getting to the end of rallies. There's a big, strong move, which is basically the market reaching for as many orders as it can get. And it just goes further and further and further and further because there's no liquidity left. So it reaches for the buyers in this case. And then when it runs out, it just goes, right, fine, we'll go back. So this is either now going to start a move, or we are going to be just part of a pullback and continuation. That's what we need to wait and see. So it's going to take a few days for the moves to play out, basically, but looking good so far. So RSI extensions, there's nothing on the hourlies today. All the hourlies that we had have all kind of played out because they were massively extended. Now they're all flying back in the opposite directions. The only two H4s we've got are the pound Swiss. As you can see, that one's just come out of extension from previous resistance. No, that's not previous resistance. That's my sell line. It is a resistance. It's this area here, isn't it? So that accumulation, yeah. So we broke down, retested, dropped, then we came back and retested this level here. Yeah. So in a short on it at the moment, not getting greedy on that one because it is range bound. So I'm only looking for a pullback. The danger here is that we are actually starting to move long on the pound, which means that we're going to do that. So I just want to be out quick. I don't want to get caught the wrong side of the pound powering up because it's been powering down for such a long time. And the Swiss franc strength means that obviously that Swiss franc strength is going to keep the pound under control, the pound Swiss, which is kind of why this has been moving so much like this. We've had a weak Swiss franc, we've had a weak pound, a weak against a weak is a range. So at the moment, we've now got a strong against a strong. So there's no reason why we shouldn't keep the range there, but I just want to be in and out of this one. We are in a downtrend, so it could well continue down. We'll see. New Zealand dollar Swiss, same sort of thing. It's a 4-hour RSI extension. We've got extended and embedded last week. We've been embedded for the last week up here. Nice divergence. Again, we talked about divergence this morning. Doesn't hold up particularly well. Good confluence, but not a reason to take a trade. So looking for a pullback back down to the 24. So I'm targeting this propulsion gap to the downside, which is basically this one on the hourly. Looking for, in case it's basically just a shallow pullback and run. Still not convinced on this Swiss franc. We've reduced interest rates. We will find out what the Swiss franc power is like next week. We've got the Swiss CPI next Tuesday. So when we get that CPI figure for the Swiss, that will give us an indication of whether or not it's strong or weak. They were forecast to go up to 2%. They decided to keep the rates at 1.75% because they're convinced they're on top of inflation. If that month-on-month inflation figure comes out higher than expected, that will increase those rates again, and then we'll go flying up on the Swiss franc. Everything will come down against the Swissy. So waiting until Tuesday next week. So until we get confirmation of what's happening with CPI, we can't kind of assume that this is going to return to where it was, the Swissy. It could well just pull back. If you look at US dollar Swiss, there's the interest rate change, which was unexpected. Immediately bought straight out of that. Coming back to complete that would need CPI to be higher than expected for the Swiss franc. If it's lower than expected, we'll just turn tail and run from wherever we are. So we'll see. So that's all you got. So there's your reverse alert just gone in on the US dollar Swiss. So yeah, that's all we got really to look at there. Aussie dollar CAD, ADR 150. Lovely Canadian dollar. Oil still coming down by the looks of things. Aussie dollar CAD rallying up like a rocket. And could get target today. That'd be nice. Straight in, straight out. Not often you get in and get out same day with a 200% ADR move. But this market is nuts at the moment, as we know. So yeah, I'm holding for 200%. We'll see. David, if on my PC I have my broker's MT4 platform and have a VPS set up on that to run the EA, if I also have the same platform on my laptop, would I need a separate VPS for that? I have no idea what you mean. A VPS is just a computer. So you either run your EAs on a computer if they're not needing to be run overnight. If you need to run them overnight, you run them on a VPS. You only need a VPS if you need an always-on machine. So if you're running something like the opening range breakout EA, we're trading the session. Yeah. So by the end of today, all orders are shut. We're done. You don't need a VPS for that. Just put your PC on, let the EA run on your computer. Market reversal alerts EA obviously will hold positions and trade for as long as it needs to get in and out of positions. So that you need to run on a VPS because it needs to run 24/7, 365. That's the only reason you need a VPS. If you cannot literally trade it on your PC. Yeah. So yeah, if you're running H1M5, it needs to be running on a VPS because it's got to be always on, hasn't it? Oil going down to 77. Gordy. That's a long way. So there's two schools of thought here. There's two things at play. One, Aussie dollar, US dollar, 125 ADR. Let me just quickly look at, is this Aussie dollar strength or is this US CAD weakness? Aussie dollar is pushing as well, so New Zealand will be pushing too. Strong moves on the New Zealand dollar. So this move is coming off the back of the pending home sales, I think, by the looks of things. They're obviously just moving the New Zealand pairs for some reason, but big strong moves on the Aussie and the New Zealand pairs. And US dollar and Canadian dollar both weak because we're not going anywhere on that pair and everything's coming down. So US dollar's weak, CAD's weak, Aussie and New Zealand strong, hence getting a really nice push up on that one. So yeah, oil. So basically there's two schools of thought. Number one, this leg, if you class it as a leg, pullback should be 38 to 50 retracement, possibly a 61.8. Don't know. So that would be one scenario. Your 77 target there is this low. So that's a deep pullback on an up leg, which, considering the speed and the slight pullback flag break we've had, I'd find it very hard to get back to $77 a barrel. It's going to take something pretty catastrophic for oil for that to happen. It's going to need to devalue quite a lot. Second school of thought is the leg we've just completed, which is here. Looking for a pullback on that. So you've got the 24 and the 72. If you put those out into the future, if you get a 24 bounce or somewhere in the 24.72 zone like we had last time, you'd be looking for a move back down into here somewhere, which is a 38 to 50 retracement, which would be a normal pullback in an up leg. Yeah. So I would say you're looking somewhere around about $86 a barrel. I would say probably is about as far as you'll get. This monthly high is a 61.8 retracement, which is 84. So somewhere between $84 to $86 a barrel would be a good buy spot, assuming that we're going to continue a market structure to the upside. And it's going to be orderly in a trend using the 24.72, which is nice, normal, strong trend does. 77 would be a big move. You're asking it to come all the way back into the previous range, which don't forget, it's taken us an entire year to break out of this range. The chances of them putting all the way back into the range, I think, is very, very slight. These highs, I would be very surprised if they didn't hold up, unless there's something fundamental that changes it. If the war in Ukraine stops, this will come down. If the war in Ukraine escalates, this will go up. So you're not going to get down there, I don't think. But I don't know. I just think it's unlikely. Is this on the CAD Swiss? We are on our way down. Yep. CAD Swiss. So this is the area we were looking for a reversion out of. Nice reversion from there. Good drop down. Nice big strong move. We need it to follow through though. This is the strongest move we've had. So if you look at the CAD Swiss rally since we started, which was back at the beginning of September. So it's the entire month of September. This is the 4th, 5th of September down here, yeah? Since we started this rally, and specifically since the 8th of September, we haven't stopped. We had an accumulation for a day. We had an accumulation for a day. We had the Swiss franc interest rate announcement. Yeah. Accumulation for a day. Yeah. We've had no pullbacks, not even shallow pullbacks. We have not even done a 50% retracement on a day, just about. What we've just had is a reversal alert and a retest back down into support. So we are now sitting at support. Yeah. So this has got to break. So there's two scenarios at play here. This high, this propulsion. So the propulsion gap move basically was buyers hitting this level, hitting sellers, hitting it again, hitting sellers, hitting it again, hitting sellers, smashing through the sellers, sellers flipping back to longs. This propulsion move is where those buyers, if they can continue control, are going to buy it from. Yeah, this is a breakout retest. So if we're continuing long, this is exactly where we will continue long from. If we're not going to continue long, we should expect market structure to remain intact and that high not to get broken, put in a new lower high, and then we'll break that propulsion. If we break that propulsion, we're coming back down to retest this area and this propulsion, which is 175 ADR. That's my break even. But if you look at it on the grand scheme of things, yeah, if you just use this month and you go for a standard normal 38 retracement pullback, you'd be looking at coming back to the interest rate rise, or rather not rise in this case, which is why it did what it did, which is there. Yeah. My target is down here, 50 to 61.8. I'm looking for a big pullback on this because the speed of this movement, the staircase, typically is followed by the elevator shaft. So I'm holding as long as I can. But I will need to look at obviously where we get to and what happens with the fundamentals. If we continue to get weak fundamentals on the US and the CAD, and we get that euro being rallied like it was this morning on the news, and we get the Swiss franc CPI increasing on Tuesday next week, this will be at 50% retracement by the end of next week. It's all to do with the fundamentals, isn't it? So we'll wait and see what happens. Do all propulsion gaps usually get filled eventually? Yes. Not all. You go back, this is not the right instrument to look at. If you look at a normal instrument, this will do. Yeah, I suppose this will do. But, so you can see all the grey ones here. These are all propulsion gaps everywhere. Yeah, everything that's grey is filled. Yeah, so if you were to count the propulsion gaps on this chart, you'll find that around about 90 to 95% of them typically are grey, meaning we've returned to them. Yeah, they're propulsion moves formed by the banks that get retested. So they act as targets. This one is the interest rate change. So when you get a very large propulsion gap, trying to we haven't really had any massive moves recently. So when you get a big one like this, if it tests like that, you tend to get a push away from it. Yeah, unless something changes. Euro Swiss isn't great because Euro and the Swissy move together. So even when there's a big news event, you don't really go very far. Let's look at something else actually. Pound odd. There you go. So there's all the previous filled ones in a range. So 80% of the time, the market spends in a range. 20% of the time, roughly, it spends trending. Everybody's got different ideas. Some people say 70%, some people say 80. Whichever way you look at it, it's 70-30 or 80-20. The market is sideways, most of it. So when you get a propulsion gap formed and a move up, the vast majority of the time, you will come back because when they push, they pull. When they make a move, they take profit on that move. When they have a push in one direction, the sellers will try to take control of the market and the buyers will push back. The buyers always form a propulsion gap when they start a buy move. Yeah. So all these old ones here, yeah, we pushed away and pushed away and pushed away, made more propulsion moves. Then we came back and tested it, finally broke it, tested the next one, tested the next one, tested the next one. Yeah. Pushed back up into that propulsion. So we started that down move. We came back and tested it. The sellers are still in control. Yeah. So the sellers are pushing the market down back through all the buying levels. So all these are orders placed by the banks and institutions, visually drawn out on your chart, so that you know where the market is likely to go next. Yeah, you don't know if it's going up or down, and you don't know how long it's going to take to go there, but you do know that the market is attracted to these like magnets, as long as the fundamentals allow. If the pound, for example, now came out and said, you know, those interest rate rises we were talking about, 5.75 to 6%, you know, we're stuck at 5.25. We've actually decided to drop it to 4.75. These are never getting filled. That thing's going down there. And you're going to make a propulsion gap like that, and you're never going to touch it, because the fundamentals have shifted on the currency, and you will run from it and you'll never get back there. You may get back there at some point, mid next year or something, but as long as normal market conditions are there, and there are small news increments where we're expecting things to happen and we get a little bit of a 0.25% difference or something like that, you will come back and you'll retest these levels at some point. And they happen on all time frames, and it happens on all time frames. On the 15-minute time frame, not so much on this one because it's been rallying hard, but you can see most of the time when you're putting the propulsion gaps in, yeah, we push away from it, we come and retest it. We find out if there's buyers that are willing to carry that move on. They are. But in this case, there was more sellers than buyers. So we tried to push and we failed. Sellers made a propulsion gap. We came up, we retested the propulsion gap. We pushed away from it. On our way back down, we're retesting all these levels where they bought from last time. If there's not enough buyers in these levels, we'll get run over. We'll kill all those levels off. Doing that, we're going to create new levels to the upside. We come back and retest those levels. Market structure. Market moves from bank order to bank order, up and down, making money. Yeah, we need to know where it's going next. If this is going to push up, where's it going to go? It's going to go there, and then it's going to go there. Why? Because that's just what it does. Yeah, resistance. Yeah, it's rather support, 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 broken it. That took a hell of a lot of money, because every time we got to this level, everybody bought it. So to get through that level, you don't just need a lot of selling pressure. You need more selling pressure than everybody that's bought it at that level for the last 2 weeks. That's a big order, which creates a vacuum or an impulse move by an institution, which creates a propulsion gap or propulsion move, impulse gap, whatever you want to call it. It's a bank order. It's a large volume of orders. Yeah. And after that's done, there'll be banks and institutions caught offside in here, i.e. longing it, needing to get back to that level to do what's called unfinished business. That is an unfinished business completed. Okay, now we can go off and do something else, because I was long here with 25 million. And as we've got down to here, I've got all my mates to go, right, we need to get back to that level so I can get flat on my order, because I'm a bank. I can get there if I want to, because I'll just keep putting money in. And as long as I can keep putting money in, this thing will go up. That's what banks and institutions do. They've got an unlimited pot of cash. So if someone gets caught offside in that level and they need to get back there, they damn well will, because they can. We can't. We just have to get on board with them. So the only way you're going to be able to make money in the market is knowing where the banks have been, because that's where they're going. That's all they are, targets, propulsion moves. They're not always going to work. Yeah. So if they're very, very strong and quite often formed by news events, you'll get back to it. And there's a surefire sign that, yeah, we definitely don't want to go back above that level. They are selling the crap out of it here. And then we put a new low in and a lower low in. So, a lower high in. So you can tell that the market structure shifted to the downside. It always starts with a propulsion move. And it starts at the very peak of it with a reversal alert. M pattern reversal. And then it just continues to where it's going to go. But look at this level here. What we're testing right now. Yeah. This is a very, very, very strong support. This is a support from 2 weeks ago. We tested it again last week. And we've been testing it day after day after day, and we can't get through it. Ring any bells? Yeah. Bang. When and if we do break this, what are we going to form? Propulsion gap. At some point, typically within a week or so, we'll be back here. Yeah, you look at this on a higher time frame, what you'll see is a break and a retest of a previous support. This level here, if you look at it on an hourly, retest of resistance and support. All it is support and resistance. But this shows you, it's just another way of seeing the support and resistance, basically. That's that shown on the hourly chart. And what was it? A previous propulsion move to the upside that got retested again and again and again and again and broke, retested, same level, which is why we pay attention to old support and resistance levels. They still work because they worked before, because there's an area where there's interest in buying or selling and taking control in one direction or the other. It works on all time frames, 4 hourly. Can't really see them as much because of the moving averages, but yeah, so that was a propulsion move to the downside, retested that propulsion gap, and then they flew away from it, made new propulsion gaps, we tested it, we hit some sellers, we pushed through them, created a new propulsion gap which will be underneath there, which we came into and tested. You'll often get a reaction at those propulsion moves because that's where we bought from. So we buy again and we buy again, and we keep buying if we've got enough money, unless there's a load of other banks which have got more money than us, in which case then it will break. Nothing you can do. There's always a bigger fish. Yeah. Barclays have got 25 million to put in. If HSBC walk along with 50 million, Barclays are going to go down. Nothing they can do. However, when they go down, they'll just put another 25 million in and push it back up to the propulsion move that HSBC formed. Market structure. Up, down, up, down. That's all it does. All day long. So we're pulling back on NASDAQ. Not going anywhere today, are we? So we've retested, but not struggling to find any buyers at this level. So might be a rotation, which will be a shame because that will spoil my morning, but never mind. More negative US news. Yeah, pending home sales. This is a sign of the housing market slowing down. So it's not the reason it's orange is it's not a leading indicator. It's what's called a reactionary indicator. So housing pending home sales slowing is a sign of we can't afford mortgages because interest rates are too high. They kind of know that's coming. The rate of which it's coming is obviously not very good. That 7.1 is that's down a lot. It's nearly 10% less than last month. So the housing market really slowing. When the housing market slows, you contract and you drop. Housing prices come down. It's the only thing that can happen because we can't afford our mortgages. So if we can't afford our mortgages, our houses need to come down in price so that we can afford our mortgages. Either that or you need to drop your interest rates. One of those two things has got to happen. Always one of those two things happens, which is why I and a lot of people think that we're just on the verge of a housing market collapse, housing bubble, because something's got to give. I need to live. I need this roof. Yeah, my mortgage is doubling in 2 years when I come out of my fixed rate. If that happens, I either need to sell my house or my house price needs to come down so I can remortgage at a better rate. Other than that, we're all going to lose our houses. That's not going to be able to happen, is it? So one of these has got to give. This is the first sign of it happening. And it's not good for the economy. Yeah. And the GDP figure will drop because we've got no money. We can't spend. If we can't spend, businesses can't make as much money. If they can't make as much money, our gross domestic product drops, which makes everything come down. So that spiral, which is what we've been waiting for, some negative news. But yeah, Powell could well rally it back up again this afternoon, though. Or this evening. So we'll see. David, I'm running H1M5, but I travel at times and have a laptop. So I want to be able to manage my trades on my laptop. You can manage your trades. Yeah, that's not a problem at all. Yeah. if you want to manage your, sorry, I didn't understand what you meant, David, but if you want to manage your trades, you're just not going to use the EA. You're just going to manually change stuff. That's fine. The EA will sit on a VPS and it will keep doing what it's doing. But if you shut a trade out, like any of the not that one, any of these trades that I've got on, yeah, this Aussie dollar CAD now, if I shut this, the EA will just go, oh, I haven't got any more orders. I'll reset myself and start again. If I close half of this out, I'll confuse it, but it will manage it. You know, that TP there is set by me, not the EA. If I set a stop loss on this, the EA hasn't got any rules to manage stop losses, so it won't manage it. But if it did, it would manage that for me. Because this order was taken by the EA. I might get out of that one, actually. 0.4% or 0.5%. Taking it. I need it this month. So just got the reversal alert. So potentially we could retest and push. Potentially we could be doing that, couldn't we? So take it while I've got it. Does Robo Forex charge extra commissions for holding between market sessions? Yeah, you have a swap, don't you, overnight? Always have a swap. Not extra commissions, it's called a swap. So your broker makes money in 3 ways. It makes money on commission, spread, and swap. Those are the 3 ways it makes money. Yeah, so commission as soon as you press the button, spread as soon as you press the button. Depending on the account you've got, you may not have commission. If you've got commission, you'll have a tighter spread. If you haven't got commission, you'll have a wider spread. And then the swap, if you hold a position overnight, there is always a swap. Basically, your broker's job is to get you to press one of those buttons as many times as you possibly can. Because every time you press that button, they make money. Regardless of what happens, they will make money. Their job. One of their jobs. They have many jobs. Part of their job is to find out how they can stop you out of your positions and take even more of your money, but that's another subject. What EMAs you use on oil? I don't use any EMAs. The only EMAs I use are the 24 and 72 on the daily. These. They're just shown on the 4-hour chart, but that's the 24 EMA on the daily and the 72 EMA on the daily. It's all covered in the bootcamp. If you go and watch the bootcamp on the website, everything I use, everything I do is all covered in there. That one, no, that one is about the indicators. That shows you all the indicators I use, why, what they do, what they tell you. And somewhere in there, oh, trend, there you go. So it'd be from there. Yeah, that's where I will talk about the moving averages. It's all in there. Go and watch it now. How was the stats for your H1M5 for those months so far? For what months? For this month, terrible. Yeah, no, I'm 15% down this month. So far. I could get that. I'm not going to get it back. If I could get it back, I could get it all back. What I need to get it all back, right? So bear in mind, we're on the 28th of the month, yeah? He checks his calendar. What I need is for this to be down here by the end of tomorrow. Yeah. So the positioning that I've got on against the US dollar at the moment means that if we were to get a move of 200 ADR today, 150 to 200 ADR today, and 150 to 200 ADR tomorrow, I would bank in the region of 5 to 10%. I'm 15% down on the month. So I could pull the month back to a negative 5%. Next month, if that doesn't happen tomorrow and I hold these positions into next week I could be banking 10 or 15%. But that's the way it goes. Swings and roundabouts, as they say. Yeah, and that's, this is swings, isn't it? Yeah, I'm waiting for the swing. I don't get paid until the swing happens. If they hold me like this for 4 weeks and the swing doesn't happen for 6 weeks, that month of 4 weeks, nothing I can do, is there? I can't make money if they won't do what I want them to do. I have to wait. That's the whole point of position trading, which is, we don't take unnecessary losses. This month, I'm going to do an analysis on this. Yeah. So I'm going to do, I might do a video on it. I'll have a think, but I need to do an analysis on this month. And I want to identify where my losses have come from, because you saw on the pound US dollar, I've done a lot of aggressive drawdown control on this pound US dollar. You can see it in here. So aggressive DD control started around here, which was a mistake because I was only about 4% in DD at that time. You can see all the aggressive drawdown controls here. Yeah. There's 1, 2, 3, 4, 5, 6, 7, 8. I think there's one in there, maybe 9. Yeah. So bear in mind, I've lost about 15% this month. I'm expecting between 9 to 10% of that to be aggressive drawdown control on the pound US dollar. If I hadn't have enacted that pound US dollar aggressive drawdown control, I would be sitting in something like 15% drawdown now. Without a loss of 15%. So I need to do an analysis on it, and I'm going to export all the data, stick it into Quant Analyzer, and look at where all the loss came from this month and figure out why it was there. I'm pretty sure I'm going to slap myself on the wrist because it is my fault. Strategy is fine. I was the problem trying to get out of this because... And it's, you can always not blame yourself or blame yourself. But I was convinced that we were hitting the pullback zone here because I've never experienced this before. Yeah, this is new. I've never had a squeeze that's gone on like this. Somebody said Aussie New Zealand's ADR. ADR hit to the upside, Aussie New Zealand. So that means the Aussie's a lot stronger than the New Zealand. We're talking about the Aussie and the New Zealand pushing. Aussie is in control. So we were talking in Telegram group, and saying we haven't had moves. Some of these moves that we're experiencing now haven't happened since 1970s. So these are completely unprecedented. The moves that we've had out of August, I'm fully prepared for August to be a bad month. Always is. Not always, but a lot of the time it is, because it's the summer trading. In the same way as December is never a really good month. What normally happens in September is we have an explosive move and we get going. What we had in September was a contraction within the August ranges. However, what happened was, rather than going sideways, we went like this, and some of them had already come down. So what I was expecting in September was a push and pull. What we got was a squeeze out of a squeeze. Haven't traded through that before. I don't think anybody has. And like I said in here a couple of times in the last month, I'm not the only person getting run over at the moment. There's a lot of traders out there getting squashed because this is just abnormal what we're experiencing. And if it's your first couple of months in position trading, I wouldn't be surprised if you ran away and system hopped somewhere else. However, if you stuck around for another 3 to 6 months, you'll see all of that come back very, very quickly and very easily. But this is not normal. So I need to pick this apart. I don't think I'm going to find a way out of it because I don't think there is a way out of it. It's just a loss. I have lost months. I have 1 or 2 lost months a year. but I don't normally have a loss month of 15%. That's not normal. So, but then again, I'm not trying to do aggressive. I've never had that many goes at aggressive drawdown control without it working. Yeah. You know, you'll see in the videos, I've got plenty of videos on the website about aggressive drawdown control. And you'll see in there, you know, the reason for aggressive drawdown control is you are so extended when you get in. If you get to the point where you're really extended to the point where you're in too much drawdown and it pushes further against you, it has to come back. It always does. Always has, I should say, apart from this month. And that is when you enact your aggressive drawdown control. And usually you may get it wrong 2 or 3 times, and that's normal. I'm used to getting it wrong a couple of times. Sometimes I get in, first one works, happy days. Then I get stopped out and I take a second one. That one works, comes back, stops me out at break even, pushes down again. I take another one and I'm like, off we go. So worst case scenario during aggressive drawdown control, I might lose somewhere between 2 to 3%. Pound US dollar didn't stop. So every single attempt failed. The other mistake I made this month, which I know, is some of those aggressive drawdown control positions. I removed the stop overnight so that I didn't get stopped out with spreads. And by the time I'd got to put the stops back on, it was way beyond where I wanted to get out. So I held them in the hope that they would get back to a level where I could exit the positions. What I actually did was they went further. So I thought, I'll hold it. It came back. And then I took double the loss on the aggressive drawdown control positions than I normally would. Yeah. So it's just a combination of too many things all happening at the same time this month. As they say, you never stop learning in this industry. But yeah, I mean, it's just an absolute squeeze from hell. Something like this on the Aussie New Zealand, if you get in there on the Aussie New Zealand, fine, get in there, no problem. If this thing wants to go down another 200 ADR, it's not an issue. But if it does go down another 200 ADR from here and the RSI gets down to here, you can't show me a time on the chart when it's been down here and it hasn't done that. It doesn't exist. That's why I do aggressive drawdown control, because I know for a fact there is no way the banks can hold that move because there's no more money left. There's no more idiots buying it. The banks can't sell it if there's no one left to buy. They're all gone. It's a squeeze. And this is what the definition of a squeeze is. The banks are squeezing the shorts, or squeezing the longs in this case. Yeah. And the longs are getting on, they're holding on, they're going, screw this, I can't take anymore. When everybody said, screw this, I can't take anymore, there's nobody left. It has to come up. The profit take move starts. But we've not had a move which has been in August, no volume. No volume. September, no volume. Volume. That's what we've never had. Well, I've never experienced it. We may have had it. I just haven't been in it. That's the difference, I think. But then again, myself and nobody else out there has ever traded through inflation figures at this height and interest rates at this height. We've never had a period of 18 months solid where the Bank of England has increased interest rates. Hasn't happened. So what does the market do? We don't know. Now I do. So if we have an interest rate hike that goes on for 18 months at some point in 5 or 6 years' time, I'll be looking at it going, remember last time that interest rate went nuts? Be careful. But, it's the same as a pandemic. No one's ever experienced that on a pandemic before. Why? Because we've never had one. How many people died on the pandemic? Not literally died, but blown. Accounts, businesses went bankrupt, hedge funds went bankrupt, pension funds went bankrupt because they have factored in market movement and extremes of market movement. We've never had an extreme of market movement like that. Yeah. So there's nothing anybody can do, no institution can do about things that are not expected and haven't happened in the past. When you look at it, yeah, you won't find that. You will not find the S&P dropping 4,600 points in a matter of 2 weeks. Doesn't happen. Hasn't happened. There's nothing you can do. And this is obviously, sorry, that's the pandemic. Sorry. I was going to say, I thought it was bigger than that. 12,000 points. That 4,600 was just a dip. 12,000 points. Yeah. And then we've never had an instance where the market's rallied when all the businesses are making losses. Yeah. Your stock price doesn't go up when your business isn't performing. None of the businesses performed through the pandemic. But what happened to the stock market? Went up at the biggest, strongest rate, again, we have ever experienced, followed by the largest bear volatile market we have ever experienced, followed by the sharpest interest rate rises we have ever experienced, followed by what happened this month, which has never been experienced. As much as you like to plan for things and as much as you've got a system or a strategy that you trade, you're going to get hit every now and again, and sometimes you just have got to pull the plug. So, you know, that's this month basically in a nutshell. So I'm going to analyze it, pull it apart, look at what kind of the what if scenarios is what you need to do. So I need to look at it and go, what if I hadn't have done aggressive drawdown control? What if I hadn't have done regular drawdown control? What would the impact of drawdown be? What would the impact of the account be? What would this be? What would that be? And draw some conclusions. I'm pretty sure, though, the conclusions are going to be very much along the lines of nothing much you could have done about that. What you should have done is pulled the plug at 3%. If you'd have known to pull the plug at 3%, though, you would have done, wouldn't you? It's the hindsight benefit, which you can't use on the hard right edge of a chart. So, but yeah, that's nothing you can do. Just one of them, but just bigger than normal, you know. But like I said the other day in the Telegram group, yes, it's 15% loss, but a 15% loss on 120% increase is, so what? Yeah, it's a bad month, but on a normal month, it's a 10 to 25% increase. So it's just wiped out a lot of profit. Unfortunately, if you've just started, obviously, it's wiped out profit that you haven't gained yet, which is the problem, isn't it, for a lot of people? So. GU blew my Fidelcrest account yesterday after 5 months, 10.4% drawdown. Blasts up today, typical. And this is typical. Yeah, I used the oil experience a few weeks ago. So during this, Aussie New Zealand as well, actually, but I'll use this as an example. This is better. So I started trading oil this year. And because we had the Ukraine thing kicking off and wanted to get into oil, so I started trading oil this year. And basically, every pullback I took, every RSI extension I took, I bought it, and we just milked the crap out of it. It was like money, 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 money. And it moves so fast. You make so much money. It's beautiful. Like gold in reverse. I was like, I found my new friend. So I bought it there, and I bought it there, and I bought it there, and I bought it there. And I was like, crap. We have lost this support, 67.24. We've lost this support. I'm out. I took it, and I took a 9% loss on it. What happened? And it didn't just push up, it bloody gapped up. It's always the way, because the definition of a squeeze is they are squeezing you and squeezing you and squeezing you till you can't breathe and you can't do it anymore, and then you just suddenly go, oh, I'm out. And as soon as you're out, everyone's out, because everybody is in the same experience and the same thing. So when you're out and everybody else is out, they do that. Yeah. We knew it was coming. You've just got to hold on. That's the thing. And that's where your risk management comes in. You've got to be able to hold on. If you go in with too much lot size, you get too close together with your positions, it means that you can't hold on. If you can't hold on, you've got no choice but to drop positions, which means taking losses. So the smaller you get in, the longer you'll survive and the less drawdown you'll have and the easier it is. But obviously you need a bigger balance to be able to use smaller lots. And that's where the catch-22 comes in with the strategy, doesn't it? So Aussie, Euro US dollar ADR. So we've hit ADR to the upside, Euro US, Euro Yen ADR to the upside as well. Euro pushing strong. New Zealand pushing strong as well, holding that down. Euro odd will also be held down. Shows you that, right? So that euro move we're seeing, very, very strong euro, much stronger Australian dollar today. Please, a video on analysing the losses for the month and the mistakes. Yeah. I will look at doing that. Aussie dollar yen 125 ADR. I think it's important to show the losses as well, because you need to see when it goes wrong. Yeah. You know, this, you can, I mean, it's not, I'm not hiding anything here. Yeah. That's all loss, all of it. It's a lot. But, you know, as I said, that's weird. Pound US dollar 125 ADR. We know that. But thanks very much, pound US dollar. Yeah. This is where I stopped doing aggressive drawdown control. Yeah. Now is where I should be doing aggressive drawdown control, but I'm not, because I believe that this has got enough legs now to get back to the 24. It's going to need news to continue to do it, but I'm not willing to do aggressive drawdown control and take the risk. It's too much risk to do it. I've lost too much on it to take that risk again. So I'm not going to get back into aggressives on it at the minute. I just want to see what the US dollar yen's doing. So we're holding up on the US yen at the minute. Okay, we're pushing onto pre-market highs on the NASDAQ. So we're going for high of session. We are high of session now. So this level again, might find that we get stuck on it. So we've got a low, a high, a higher low. We just put in a higher high, sort of. The structure's long, so I'll be watching these levels for sells. We get there. Not doing drawdown control, no. Learned about my psychology this month, that every time I put an aggressive drawdown control on CAD Swiss, when it went against me, I just sat there watching it instead of closing it. Yeah. This is why, and this is the problem with, it's not the problem, is it? We know what the problem is. Stop losses. Yeah, this is why you lose money, because you put a stop loss in. And that also becomes the reason why you lose money, because you don't put a stop loss in. Because when you put a stop loss in the market on an aggressive drawdown control position, the market has a lovely habit of spreading beyond your stop. That's what brokers do. They spread beyond the stops to take the money, and then they cut the spreads back down and carry on. That's their part of their job. How much money can I make by spreading? If I spread by 20 pips, I make 20 grand. If I spread by 25, I make 27. If I spread by 35, I can make 45. Spread it by 35. Whatever, yeah. Bring it back down again. Okay, well done, John. Excellent, here's your bonus. That's what goes on in brokers. So when you put your stop there, if you go short on the CAD Swiss with an aggressive drawdown control position there, and you put your stop there, overnight, they'll spread you. Price will never get there, but you'll get out, and then it will carry on. And that's part of the problem with aggressive drawdown control. You have to remove it overnight if you're going to hold it overnight, unless it's far enough away. For me, if it's anywhere closer than an ADR, it's out. I take it off, because they will take it. They will take it. And I had aggressive drawdown controls taken. Part of the course. There's nothing you can do. If you want access to the market, you need a broker. Just try and pick the broker that's the nicest. And to be honest, there isn't any. So you just pick a broker and deal with it. But if you hold on to those aggressive drawdown control positions and hope, it's not going to happen. I subconsciously did it this month on the pound US dollar. Some of those ones, I held them too long. When they went back in my favor, I didn't get out, and I should have done. What I should have done is waited for confirmation, but I didn't. Mistake. Everybody makes mistakes, and that's where your losses come from. Yeah, the perfect trader won't make mistakes. The perfect trader won't make losses. They will make losses, but they're small. Everybody is human, and everybody has emotions in this. Doesn't matter how much you try and remove the emotions. There's emotions. It's money at the end of the day on the table, isn't it? So to avoid aggressive drawdown, I close every morning as many positions as it needs to get the average within ADR. Yeah, you will obviously take a lot less money, but you will also take a lot less drawdown. Yeah, this is, you know, this is partly why in the boot camp I don't give a a specific set of rules, because it's a methodology. It's a way of trading, and there's no one way to do it. This here, look, automated drawdown control being done by the EA. One way to do it. The other way to do it is not to do automated drawdown control and to do it manually when you feel uncomfortable. Yeah, there is no right or wrong way of doing it. This will keep your drawdown smaller than the manual way, because the manual way, you'll be like, oh, maybe this is it. Oh, maybe this is it. Oh, maybe this is it. Crap, I should have done drawdown control back there. I'll do it now. More drawdown. Yeah. EAs, and this is why EAs are so good. They are 100% robotic. And if it gets to the point where you've told it, I don't want to go any further without taking a small loss on this position and hold on to the rest of it, it will do exactly that. It will do what it's told. As a human being, you can hold on to this until Christmas and not do any drawdown control. You'll be in pain if it continues to rally, but those are the choices you have to make. There's no right or wrong. If you hold on to this and go into 7% of drawdown and then it comes down like a house of cards and makes you 5%, well done. But some people are comfortable with that. Some aren't comfortable being over 2% in drawdown. Therefore, you would need to do this way more often, which means your P&L is going to be harder to keep up. Again, it's an individual thing. Everybody's got a different tolerance level. The only way you find it is by doing, unfortunately. As I say, there's no... What do I think of Magic Keys version 2? No idea. Don't even... Oh, I do know what it is. It's that company, isn't it? The company that makes Magic Keys sells trading courses. They also have a prop firm. Do you think they're in this job to make money trading or selling you all the crap that you're never going to use? Magic Keys. I've never heard anything ridiculous. Magic Keys. Let's press a button so that we can trade. It's a physical piece of kit. Looks like a calculator. Buy, sell, move stop loss. Buy, sell, move stop loss. Oh, that was hard, wasn't it? I need a piece of kit that's $100 to do that. Oh, I just closed that position by accident. Whoops. That was your fault. That was your fault, Paolo. That should have been cancel stop loss, not close order. There you go. There's a little loss. But that's not a bad thing, is it? Drawdown control. Totally the wrong time to do drawdown control. But this is the beauty of position trading. I don't really care. It's such a small amount of money that it doesn't matter, does it? There you go. Banked 500, done 600 in drawdown control. Happy with that. Not a problem. Now my average is a lot closer. So I only need a 150 ADR push tomorrow and I'm done. I can move my TPs up into here and still make a good profit. Doesn't matter, does it? When you've got so many positions on anyway. I started trading live this month and have done 10.56 and are in 1% drawdown. Yeah. This is again the difference with position trading. If you started in the pound US dollar this month, yeah, you would only, if you started position trading in September, you would have only got into the pound US dollar here, and you're in it, but you're in hardly any drawdown on it because you're not squeezed. So everybody's going to have a different experience of their own drawdown. Everybody's drawdown is going to be different. Everybody's results are going to be different because, like everything, it depends when you start and which instruments you pick. If you haven't traded the pound US dollar because you had exposure on the US dollar and the pound, and you weren't able to take the pound US dollar, happy days for you. You've survived 2 months without having a squeeze. If you were exposed on the CAD and the Swiss and you couldn't take the CAD Swiss short, well done. You're happy. You probably made 10, 15% this month. However, if you got into those instruments, you got squeezed. And this is why two people doing exactly the same thing can have completely different results. Yeah, two position traders can sit on chairs next to each other in an office, trade exactly the same strategy in exactly the same way and have completely different results because it depends what you pick and what the market does. The market does what the market does. whether you've pressed the buy or the sell button is the only reason you make or lose money. The market determines whether you do make or lose money, not you, not anything, not a strategy, not anything else. Literally, if this goes up when you've bought it, well done. If it goes down, deal with it. Everybody's going to be in different positions. Euro CAD ADR. ADR hit to the upside, Euro CAD. Euro still pushing nicely. Australian dollar starting to weaken a little bit as well. Am I seeing some wiki movement on US dollar yen? No, not wiki movement. You'd know if it was what the moves that you get, those kind of pre-market shots, if you like, before the intervention are like that sort of stuff. It's big move. This is just normal price action. They're just buying. They're just holding it at the minute. They don't want it to come down. The US dollar does not want this to come down. It's in their interest because they just make more money. Yeah. And the Japanese products get cheaper and cheaper and cheaper. So, you know, this is the thing. It's not necessarily, you'll know it'll be a move. I mean, it'll be something like that, but it'll be very quick. You know, be an ADR spike or something. That's when you need to get on board and hold on. But it may not happen. You know, I've showed you this morning, you're probably referring to what I showed you this morning. Every instance we've had previously for an intervention move has had a key moment before it where we've had a what the hell was that type thing. And the market's like, that was weird. Look at the news, nothing in the news. Brokers, fine. Data feeds are all the same. No idea what that was. That was the Japanese preparing. We know that now because we've seen it every time. So we know to look for it. But will they do it this time? I don't know. Might just suddenly collapse. It might not happen. We might get exactly the same move as we had last time. They threatened intervention and the market will literally just sell off for a week. Nothing to do with the Japanese. It will just sell off. Because it needs to, because they need to take profit. Just get a profit take and then it will carry on. And then the intervention warnings will start again. And we'll be talking in November about possible intervention. Yeah, we've been talking about possible intervention for months because we got to the 145 level. This was back in June. We were talking about it. The Japanese were saying, if you do not stop pushing us, we will intervene. The market in that instance decided not to. We got back here and the Japanese said, if you keep pushing, we will intervene. So we went sideways for a month. And we popped our head above and they said, if you keep pushing, we will intervene. We kept pushing. Yeah, 150 and higher than that. It might do. I don't know. We'll see. It's more, so I couldn't get myself to close the aggressive drawdown control positions because I was hoping, even when they went into some profit, I had the option to close them to de-risk, but I froze. Yeah. Just something you need to work on. It'll come. That's an interesting point. I saw that I did this because I saw aggressive drawdown control as a way to increase my profits instead of seeing it as a method of de-risking. That is a very good point because what happens when you take an aggressive drawdown control position? Let me look at the CAD Swiss here, right? So we've got what, 1, 2, 3, 3.5, 4 lots short here. If I place a 4 lot short here or a 2 lot short here, this average jumps to there, which means I can get out on a half an ADR push. But what you will find is that now the rate of profit is exponentially larger. So when you get to here, you're going to be in 1% profit. When you get to here, you're going to be in 2% profit. And when you do the maths and you think, when I get down to there, that's 10 to 15% profit move. Because as you're scaling in with small lot sizing. Should be a position there. But what you've now gotten is a very large amount of lots. So when you get back beyond your break even, the rate of drawdown has been slow, but the rate of profit is exponentially faster. So you see your P&L suddenly accelerate up very, very, very quickly. You get an ADR move down when you've got an aggressive drawdown control position on, you'll easily get 3-4% back. You'll be paying for way more than you've lost on that thing. And there is a very strong urge to hold it, because you know that if you get that push back and that becomes the next leg down, that 4% turns into 8 or 10. And what if this is a trend reversal and we start trending the opposite way? That's a 100% account increase. You won't hold it for that, obviously, but that's what goes through your brain when you see that starting to go. Because what happens is on your P&L, you see that one aggressive drawdown control position not being the normal 200, 300, or 20, or 30, or whatever it may normally be. You see it being 600, 700, 900. It's 2 to 3 times larger than all the other positions are in drawdown. It's very tempting to let that run because it makes you a load of money. Sometimes it happens. Some of the best months I've had, the 25% plus months I've had, 25% is about the tops, 25, 28. Those months have had an aggressive drawdown control position that's actually got a run on it. But you take them. Yeah, you take them. The market wants to give you that, right? And you happen to have 2 aggressive drawdown control positions on. Don't go, oh, I'll get out here just because I should. You think it's going, hold it. But if you will also find that you get scared out of it very, very quick, because although that P&L goes up very fast, it also comes back very fast to break even. Every little pullback, you're thinking, that was $1,000 a minute ago. Now it's only $650. Where did that $350 go? It was only a quarter of an ADR. Imagine if it goes another quarter of an ADR. That $1,000 has now turned into $350. If it goes a quarter more, I'm going to break even. You'll take it. It's very hard to hold, which is what we were talking about the other day with trends. Why trend trading doesn't work. It doesn't work not because trend trading doesn't work. It doesn't work because people can't hold trends. Yeah? Every time this pulls back, you panic and you get out, which is why you can't trend trade, because to be able to get from there to there, look at this trend. Yeah. This is a bit of an anomaly, I have to say. This isn't what I would class as a normal trend. Normally in a trend, you get a pullback. Yeah, this is pretty parabolic, isn't it? But normally you'd get that, wouldn't you? In a trend, it's a normal trend. Obviously, these will be different sizes, whatever it is. But every time it does that, you panic. Every time it does that, you panic. If you've got through 2 of them, when it does that the 3rd time, you're super panicky. Why? Because trends quite often will pull back further after the 3rd run. So you super panic there. If you look at it when you actually got in, you go normally to break even or into drawdown on the first pullback leg. The second pullback leg makes you a nice profit, but you don't take it because you're holding the trend. When the second pullback comes, it gets you very close to your break even. So all that profit has disappeared. If it goes into a range for a bit, you panic and you take it because you need it. You never get to there. Never seen a trend trade. I've seen trends, the odd trend trader post the odd 15, 20R return. But usually it's because we've had a parabolic news event where it's gone like that. And that's not a trend, is it? That's a parabolic news event. You just happen to be getting into a trend trade as the news shifted momentum in the opposite direction. Swiss franc there. So you went in, you got back, you entered on that break in a trend trade. It pulled back, almost got you to break even, went parabolic, touched it and didn't look back. And you're going, look at the size of my reward. Your reward was caused because the Swiss National Bank decided not to increase interest rates as expected. Not a trend trade, it's just bloody lucky. Those are the ones you make the money out of. But how often does that happen? Not very often. Hard to do. We haven't managed to get above this high on the NASDAQ. Stuck. Let's have a quick look at the other indices, see what they're up to. Dow, stuck. S&P, it's very similar to the NASDAQ. Tapped into pre-market highs. Holding. So buyers are in control at the minute, though, so might get another leg up. However, if we do get another leg up, we're only coming up to here. I've got a buy stop there for some reason. Get rid of that. That was a manual I put in the other day on that break of that high, wasn't it? Good job I spotted that. Okay, here we go. So we're rallying up to yesterday's high. So watch that for resistance. So my target on this is 5R. What's the time? 4:10. So we've still got a long way potentially to go. So ADR is all the way up there. We haven't really gone anywhere today. So that's the pre-market range. Literally, all we've done is we've popped our nose out the bottom of the pre-market range, and we are just about to test the pre-market high. So for the entire New York session, we haven't broken pre-market levels. So ADR is miles away. So there is actually a lot of room for movement on this today. So while this does look like a good spot potentially for a pullback, in the grand scheme of things, it might well be far too early to get out. So I'm going to watch price action if and when we get there. We've got to get there yet. We can't even make the pre-market high look. Anyway, at the minute. So hold it. See if we can get out. David, Lee basically has his own magic keys available in the marketplace. Yep, I do. It's called the Price Action Toolkit. Thank you for the advert, David. So whoever said about magic keys, if you want magic keys, but instead of having a thing you've got to do and push down here, what you could do is instead you could just use the Price Action Toolkit, right? Which is basically magic keys, but it's only $49 and it works in MT4. So you don't even have to have this thing down here. It's half the price. It works in MT4 and it does exactly the same thing and more. There you go. There's a little advert. Price Action Toolkit. If you're thinking about buying magic keys, think twice. Just a gimmick. Really is a gimmick. Paolo, I'll stop asking questions. Get you riled up. I'm not getting riled up. I just I got fat fingered, didn't I? Do you know what? In the grand scheme of things, that doesn't affect me this month at all. You know, a 0.5% loss after a 0.5% gain is just a drawdown control. And at the end of the day, I've moved my average up. So thank you. It's not a problem at all. Trust me. If I could get out of the CAD Swiss sooner, I will. I was going to ask you about the Robbins Cup. I'll leave that for Telegram. The Robbins Cup, what's that? I've never heard of that. Well, ask me in Telegram. Yeah, I don't know what that is. Yeah, Magic Keys is just a pointless thing. It's just a pointless thing made by a trading education company. Because it doesn't exist. You know, it's one of those things that doesn't exist, right? And there's a reason why it doesn't exist. You see this thing? I can't see it. I can't get it up because my... Right, this is called a keyboard. It's got buttons on it, right? I can only just about see it. But basically what Magic Keys is a load of buttons on a piece of plastic. You've got one plugged into your computer, which you can program to do anything you like with a piece of software, right? So you could either spend $100 odd or so on a piece of plastic that does what my EA does for half the price within your terminal, or you could spend 10 minutes on Google figuring out how to get your keyboard to do exactly the same thing. And if you want to, go and buy a load of stickers from the art shop for 99p, which have got colors on them, and write buy, sell, stop loss to break even, close, trail, and stick them on the keyboard. Do you know what? You've just made your own Magic Keys for free, probably for 99p. Ta-da! Yeah, Raja Banks invented Magic Keys. Don't want to put money in that guy's pocket. No. He owns an education company and he owns a brokerage, right? The guy's making enough money. Apart from selling a piece of plastic, which he doesn't even bloody use, does he? I don't know. I haven't watched Raja for years, but every now and again I watch a replay and just see what's going on, and it's exactly the same that's been going on forever. He's got thousands of people in there wanting to buy a Lamborghini because he's trading some account, and all I ever see is him trading the pound, yen or gold on news events and making a 20 grand loss. So He obviously needs to sell magic keys to get his money back. But I don't know. I don't even know what strategy he trades. So. The Robbins Cup is a competition where traders come and compete for who is the best FX trader. ICT never wins. Yeah, I'm not surprised. Those competitions. Tom Hurgard's won a competition in trading. Don't know when, years and years and years ago. Anyone can win a competition trading if you are lucky, right? Because in a trading competition, what do you not do? Trade normally. Why? Because trading normally would mean you make small risks and small rewards. In a competition, it's a race to see who can make the most money. Nobody trades normal risk and normal strategy in a competition like that. Yeah, because it's luck, right? I've entered trading competitions on E8. E8 have trading competitions running. There's trading competitions on one of the other prop firms as well. I can't remember which it is. And I've entered those as well. I think it was Surge Trader. Can't remember. But do you know what I did? I went in and I went 5 lots long at the open. And do you know what? It went down. And I lost. If it had gone up, I would have made about 70 grand. Do you think I would have gone close? Leaderboard. Nearest person to me is 25. Right? Sit there. See if anyone can catch me. Because they'll be trading really hard, really aggressive, and really over leveraged to try and get to me. Yeah. Am I a good trader? No. I hit the button. I was lucky at the open. I got 100% strike rate on an over leveraged trade. Competitions are just crap. If you win a competition and you happen to sell a course or something, ding, 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 ding. There goes the bells on people coming to see how you did it. Buy my course. This is how I made all this money and won this competition. No, it's not. You were lucky. Load of bollocks. 90% of the stuff you find in this industry. 95. I feel like I know more info than you. I probably have heard of the Robbins Cup, to be honest. I just probably know I would never pay any attention to it because it's just one of those. I've entered, like I said, I've entered trading competitions, and you realize, right? It's one of those things when the trading competition kicks off, right? And one of these, I was sitting there and I was watching it. Put a chart up while we're actually rabbiting on. Just want to see what the NASDAQ's up to. But you're sitting there, and I'm sitting here like this, watching the NASDAQ going, okay, waiting for a setup. Okay, nothing yet. And like an hour goes past, like, market's a bit quiet at the moment, isn't it? Wonder if anybody's taken any trades yet. Jesus, this guy's made 27% increase on his account on gold with 150 lots. I'm sitting here waiting to trade. That bloke's just gone. That's basically what happened, isn't it? No chance. You could be the best trader on the planet. At the end of the day, you're only going to make money if you press the button and it goes in the direction you press the button in. That's literally it. Luck. Going forward, I want to plan my aggressive drawdown control purely for the reason of de-risking. I.e. take one aggressive drawdown control with the intent to offset 2 positions losses in the same pair. Yeah, so that's one thing you can do. You can look at your trade manager dashboard or whatever and say, right, I've got a $300 loss. I've got a $600 loss. My aggressive drawdown control position is in $1,500. Close it. Close it. Bank half. Take half of that. Make that a 150. And you've done drawdown control. That's the purpose of aggressive drawdown control. Get that average in. Either you're going to get a lucky good run where that average now becomes profit, or you're going to get a move where it stalls out a little bit and you think, I can make some real inroads on this drawdown. And that drawdown control, as I say in the videos, it doesn't have to be on the instrument you're trading. It can be on anything in your portfolio. If you do an aggressive drawdown control position on pound US dollar, and all of a sudden CAD Swiss drops and it becomes the biggest, baddest thing in your portfolio, deal with the CAD Swiss. Use the pound US dollar profit to offset the CAD Swiss. You're offsetting risk. Risk is everywhere. Don't concentrate on it being on just one instrument either. Look at your portfolio as a whole. Larry Williams is still the world record holder for the Robbins Cup, and he freely admits the market conditions just happen to be very favorable for his trading strategy. Yeah, exactly. And look how famous Larry Williams is. Do you think if he hadn't won the Robbins Cup, he'd be as famous? Probably not. It's just one of those things, isn't it? People become famous by accident, don't they? You know, there's lots of people become famous for all sorts of reasons, but at the end of the day, with this thing, you got this button, right? And if you hit the buy button and it goes up, you're making money. If you hit the buy button and it goes down, you're not. Yeah. So it doesn't matter what your strategy is. If your strategy's got a 70% strike rate and you enter a competition, if you took 10 trades, the first 3 of them could be losses. Yeah. And if another guy's taken 5 trades and they've all become winners and he's only got a 50% strike rate, you've got that much room to get back on him. And there is nothing wrong with your strategy. There's nothing wrong with his strategy. It just so happens that the odds fell in his favor at a specific point in time. And you don't know, like this today, whether this is breaking short, long, or it's just going to flip-flop for the day. You don't know whether it's going to go parabolic down to 5R within 10 minutes or whether it's going to take 2 hours to get there. Yeah. Every day, every candle does something different to the day before, which is why there's no system or strategy that is repeatable over and over and over again with any success rate that is going to help you in any way, shape, or form. Because your losing rate and your winning rate are going to be completely different as the market is every time. As long as you do the same thing and it has a strike rate slightly higher than a losing rate and you have a reward slightly higher than a losing rate, it's a profitable strategy. But you're going to get that happen many, 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 many times. 10 losing trades in a row. Go and flip a coin 100 times. Count what the longest losing run was. Or let's say heads is a winner, tails a loser. Flip a coin 100 times. Count how many tails in a row you get. Odds say it's 50-50, isn't it? 5 winners, 5 losers. It's not. You can have 25 tails in a row. Imagine 1% risk 25 times in a row. That's a 25% loss on your account. How the hell are you going to get that back? That's the way it goes. Yeah, it's a 50-50 shot. You just got to hold your nerve through the strategy, basically, which is the hard bit, which is why trend traders don't do it, because trend traders have a 70% loss rate, 60 to 70% loss rate. Yeah. So can you imagine being wrong 70% of the time and then repeating the same thing, getting to a point where you've just got the money back you've lost? Are you going to hold that? Of course you're not. The best one in the world, everyone can turn around and say, yes, do it then. You're here because you're not doing it. And I can't do it either because trend trading is hideous. Hideous. It takes too long. Everything takes too long in trading. We want to be in, we want to be out, we want to be done today. That's what we want. Fortunately, that don't happen either. But anyway. Right, I'm going to leave it there. I might just add that position back on. I'm just going to put a sell stop there. Just to, because that sell stop basically will just repay that move. Assuming that move happens, obviously, that loss that I've just taken there, that will counteract it. So just going to add it back on there. Also, that will help bring the average up. So yeah, I'll be back tomorrow at the same time, 2:20, and tomorrow morning at 7:50 for the Frankfurt session. The plan on the indices, it doesn't matter which you're in or what you're in, if you're even still in, because it's been a hideous open. My plan on the NASDAQ is basically to run it up into yesterday's high. If we can get to yesterday's high, I shall be watching price action to see if there's signs of rejection. Yesterday's high was actually very, very close to the close. So there is a good chance that there won't be much limit orders there. We've had multiple down days as well on these indices. So the market is looking for an up day. We've got a weak US dollar, which is bullish indexes. So this is why I'm a little bit reticent to get out of a trade here today, because I think there is a possibility of pushing a little bit further up into this balance that we sat in for 3 days. So 5R target to the upside, I'm going to look to get there. But obviously, if we get that, you know, multiple rejections at the same level, then I will probably bail and look to get out on a pullback on the short and hedge out of it with break even or tiny profit. But that's the plan. But at the minute, it's looking like it's a locked in hedge loss because this thing's not. Oh, there you go. Just as I say it, it breaks the pre-market high. There you go. So we're moving now. Afternoon. Thanks for subscribing, Irene. Welcome aboard. I'm a bit reticent about subscribers because over the last 3 days, every person that's subscribed, not every person, but half the people that subscribe have actually been Helpy FX trying to spam. So I'll wait, and it's usually about a minute or two after the subscription Helpy FX spams. So I'll end the stream in a minute. They won't be able to do it if that is it. But Irene, if you're a real person, welcome aboard. Right, so we are pushing up into there now. So I'm going to monitor price action up here. I'll update in the Telegram what I'm doing. But yeah, so watching this level, I'm definitely getting out at 5R, and that's not far away from ADR. So hopefully we'll get up to this propulsion gap and find a pullback there. So if I can get out there, it pushes up to there and it gets a pullback down to here or something, I've got an exit. We'll see, but pushing at the moment. Let's just see if US dollar's coming down. Euro US dollar pumping is what I'm looking for. So this is weak US dollar, again, which is bullish index. So this has got further to go potentially today. We're just coming out of lunch in New York, aren't we? So, all right, have a good one. I'll be back tomorrow, same times as usual. Anything you need, I'll be in Telegram. Hopefully these moves will continue, and tomorrow we can sit here and go, that was hell. But we're out. All right, have a good one. I'll be back tomorrow. See you then.